Hello and welcome to Upstack America's Oracle EBS Financials Functional Training. My name is Bob and I'm the lead senior consultant. And with me I have Victor, who is also a senior consultant. And today we are handling General Ledger Lesson 22. Victor, can you please walk us through?
Thank you, Bob, for the introduction. Welcome to Lesson 22 of Oracle Financials Functional Training. In this lesson, we are going to continue where we left off with revaluation. In our previous lesson, we encountered a system error that was preventing us from carrying out the revaluation, but we were able to sort it out. So we are going to pick up from there. And just a recap of what we did, we entered rates, and then we entered foreign currency journal on the, we're doing revaluation for the payable side. So we entered this particular foreign currency journal using the exchange rate that is shown. And so what was left was doing the revaluation for the payable side. So let's go straight to the system and pick up from where we left. And this is the revaluation screen where you find yourself after you follow the navigation, currency, then revaluation. So we are going to create a revaluation set, and the name is going to be Mascani Revaluations. And let's call this AP for payables. We are going to create a different one for receivables, although we can still use the same set and run it twice, but let's just create two different ones. So that's the name. For our rate type, our daily rates, we're going to get it from our rate type, which is Mascani corporate. Okay. Then we have to enter the gain and loss accounts, which we already created in our previous lesson. So we give the account was 6,000 for loss and gain. You have to specify a value for the other segments too, and we're going to pick the default value for every other segment. Okay. Okay, and you can see the company segment is grayed out. So when we when we enter the accounts that we want revalued, then we are going to enter the company, and that is the company value that is also going to be used for the loss and gain. All right. And we have the same account for unrealized gain and unrealized loss. If we had created separate ones, then we would enter the one that we wanted for loss, unrealized loss separately. So after we have done this, we come down here, and now we enter the accounts that we want to be revalued. Okay. So we want to do this for company 1. If you want to do it for both companies, then you can enter the range here, but we've only entered an account for company 1. The account we want revalued is payables. Okay. When we are entering our journal, I believe the division we used was this, industrial plants. But then again, if you have entered transactions that are affecting different combinations, then you can still enter the range over here, and all of them will be revalued. But in our entry, I believe everything else was default. Okay. So we've entered the gain and loss account. We've entered the accounts that we want to be revalued. So we click this revalue. When we do that, this window pops up. That is the ledger. This is the name of the ledger set. The period that we want to do this is the period we entered the journal for, which was July, and the effective date and the the date for the rates we want to use. We can use July 31st, okay, because we are in our scenario, we are assuming that we are doing this on the last day of the period before we run our financial reports. So we want to use the effective rate on the that is there for the last day of the period. Okay. So select OK once you enter the parameters. Just like any other of these concurrent requests, you can decide to schedule or do it one time. So we're going to go ahead and click submit. You don't want to schedule, you're just going to do one. And the request has been submitted, okay? So we can go to SRS screen just to make sure that, so this is the one we are waiting for. Hopefully everything goes well. Okay, so the request has been completed without any error. So what do we expect? Because after this process has been completed, we have this that we already entered, and then we have this journal A, which is the foreign currency journal that we entered. So the process of revaluation, we expect it to produce another journal. This is journal B, okay, which will affect the payables account and the loss gain account, and will take care of the difference brought about by the change in exchange rate. All right. So let's go and confirm. You can select view output on that screen, and it will show you the results. And here you can see revaluation requested for the following currencies: Kenya shilling. This is the rate. These are the gain loss accounts. Revalued account ranges. This is the payables account that we want to revalue. And this is the journals that have been created, the revaluation journal, right? This is the batch name, and this is the journal name, which is revalues Kenya shillings transactions, and it tells us that there is 2 lines, and the debits are $50 here and $50 for the credits, which is what we expect. But let us go back to the windows and see the actual journal. So let's close all this, go to enter journals. The period should be July. There are not many journals in July. So let's see. revaluation. Let's review the journal. And you can see here for the entered currencies, it's 0, but revaluation has been done, and you can see that there's a debit of $half and a credit of $half to the loss and gains account. Is that what we expected to see? Yes. Right. So that is revaluation for the payables account, and that is how the change in exchange rate is catered for. Okay. And so what happened is that the company basically gained revenue because the dollar appreciated against the currency Kenya shillings, which in which their liabilities were, and that is why there was a debit of $half, meaning that their liabilities reduced by $half. So you still have to post this journal, and once you select that, then you have finished your revaluation. Okay. So that's how to go about the revaluation. So we are going to do one for receivables too, and it's more or less the same thing. We're going to enter this journal, and then we already have rates because we are still going to enter it in the period of July, and we already created our loss gain accounts. All we have to do is enter this journal and then carry out the revaluation. Okay, so let's go to Oracle, enter journal, new journal. So this is Kenya. Because this is going to be receivables, let's call this Kenya sales. Kenya sales. You can change the effective date to a date between the 1st and the 15th, where the exchange rate is $1 for 100 Kenya shillings. So let's say this was entered on the 1st. We want to enter this in Kenya shillings. Okay. And you see when we changed the effective date here, it was also changed for the conversion date. For the rate type, we want to use Maskani, and it gives us the rate is automatically retrieved by the system. Just close this DFF here. Let's enter the lines. So company 1 made a sale so revenue, let's use this revenue account, 4,000, division 100, our favorite division. Okay, so it was a sale. We credit revenue account. Then let's debit our receivables account. This is 1,200 and division 100 and default for everything else. Okay, let's debit that by the same amount. Again, you can see the entered and the accounted. This is the conversion going on. So let's post this journal. So far, so good. So we have entered this exchange rate 100. You see. So fast forward to the end of the month, which in our case in our system is 31st January. Exchange rate has turned to $1 for 105 Kenya shillings. Maskani wants to run financial reports, but before they do that, they have to do revaluation so that they do not state the wrong numbers in their reports. Okay, so let's go ahead and do the revaluation. So let's go ahead and do revaluation. Close that. Currency revaluation. So we can use this, which is the one that we created for account payables, and just change the accounts here that we want to revalue, or we can just go ahead and create a new set. So let's create a new set, Maskani revaluation, and let's call this for account receivables. Okay. We still use the same rate type and the same loss and gain account, 6,000. Let's default everything else. Okay, now let's enter the accounts that we want to revalue. So that's company one account is 1200, division is 100, that is the particular account that we want to revalue, and click on revalue. Parameters window will pop up. Period we want to do this is for is July. Effective date 31st July, same as the last one that we did, so that we can use the exchange rate for 31st of July, right? So okay, and we're going to submit. We don't want to schedule anything. Close all that. Let's go to our SRS screen. Hopefully this will complete without any problem. So that's good. Normal. You can view the output here before we go to the actual journal screen. As you can see, this is the effective exchange rate that was used to create this journal at this date. The only thing that changed is the account that we were revaluing. And as you can see, 2 lines, the journals created with 2 lines and 0.5 debit and 0.5 credit, which is what we expected, right here. So let's look at it from the journals window. So go here. Period is July. Should be this second one that is unposted. So there you have it. You can see the 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 gain loss account was debited by $0.50. Why? Because Maskani lost revenue when the dollar appreciated against Kenya shillings. So the Kenya shillings amount is not changing, but it is worth less dollars after the exchange rate changed. So it's worth $0.50 less, which means whatever they were owed in US dollars also reduced, which is why we are crediting this receivables account, which is an asset account. When you credit an asset account, you are reducing. You're reducing that asset. So that is this is the correct position now at the end of the month for Maskani, and you can go ahead and post this. Now, of course, all this work is work that will be done by accountants. This entering journals and entering exchange rates and all that. However, as a financial functional consultant, you need to know how to do the setups. You need to know how to create rate types, to enter exchange rates. You need to know how to create the revaluation set so that now you can be able to train the accountants who are going to be using the system. So those are our two examples for revaluation. Remember, this can go both ways, meaning the exchange rates can shift in different directions, but the concept is the same. We had already talked about this profile options that pertain to revaluation, and we said that sorry, and we said that if you want to run revaluation against income statement accounts, you can use this profile option, and it will allow you to choose whether you want to do YTD or PTD revaluation. The ones that we have done, usually it affects YTD balances because those were balance sheet accounts, receivables and payables, and assets and liabilities. So that's it about profile options pertaining to revaluation. Now, when we were talking about revaluation, as we were doing the introduction, we said that revaluation journals are usually reversed at the opening of the previous period. We have seen this kind of this phenomena in other concepts when we're talking about cash and accrual methods of accounting. So why do we reverse revaluation journals? So remember, when we are doing revaluation, it's usually on transactions which we can say they are open. So for example, when we're talking about payables, it's because we still owe a certain supplier a certain amount of money, right? So it's a debt and we still haven't cleared that debt. So when we actually, when that company actually clears that debt, the exchange rate will be different again, or it might be different. So for example, look at this case. For payables, we entered the transaction when the exchange rate was $1 US to 100 Kenya shillings. we did our revaluation at the end of the period when the exchange rate was $1 for 100 Kenya shillings. Now, when we finally make the payment, let's say on the 5th of March, then the exchange rate will be $1 to 110 Kenya shillings. So again, the amount in US dollars will have changed. So at the opening of the next period, we have to reverse the revaluation journal. So this is the original revaluation journal that was created at the end of the period before the financial reports were run, okay? So on the opening of the next period, we do a reversal, all right, to reverse this revaluation journal. And then now on the 5th of March, when the actual payment is made, the exchange rate is 110, all right? So the amount that we are going to pay in dollars will be 1050 divided by 110, which is 9.5, okay? So in total, the total difference caused by a change in exchange rate is $1. So that is the final loss. That is the final gain, sorry, in this case for the payables. That is the final gain, all right? So what I'm saying is that now after the payment has been done, then a final revaluation will be carried out, which will show the final position of these accounts. Because when we are doing this revaluation that we actually did in the system, we were just doing it so that the accounts can show the correct numbers in light of the current exchange rate. But now, at the time of payment, again, when the exchange rate has shifted again, we will use that particular exchange rate, and then now we will carry out the final revaluation using that exchange rate and against the initial amount that had been entered in the first journal, the original journal. So, and that is the case even when you shift to receivables. And so this is the original revaluation journal. At the opening of the next period, you reverse that. And then now when the final payment has been received, right, you use the prevailing exchange rate, and then you do a revaluation using that prevailing exchange rate. So if the exchange rate at that point is 110, then that's the one you will use, and you will find the final position of these accounts. So that is the whole topic of revaluation, I would say. We do revaluations and then we reverse them, and then we do the final revaluation after the payment has been done or received. And there's no difference in how that final revaluation is executed. It's just the same way that we have done it in our examples, all right? So that is the whole topic of revaluation. In our next lesson, we are going to look at reporting currencies, which is the other topic attached to foreign currency. But until then, that's a good place to end. And Robert, unless you have something else to add.
Thank you, Victor. I think I'm good from my end. Thank you so much.
Thank you.